This conference will now be recorded.
And so these recordings will be in YouTube and they'll be 4K recordings and you'll be able to watch them, you know, on monitors, television, everything else. So you'll be able to get a better picture in terms of that. So let's see if I can share my screen. So as we discussed last time, our focus is always to look at things from the standpoint that we are running a business. And we're doing our review of financial accounting because managerial accounting will be integrated with financial accounting. And so we'll have some add-ons. But the assumption is that you know what a business is, how it is organized, that you start a business by putting cash in. That business is separate from you, and your ownership in the business is represented by stock certificate, but the business itself has to operate independent of you. And all companies prepare an income statement, a statement of retained earnings, and a balance sheet. All companies prepare an income statement, statement of retained earnings, and a balance sheet, and a statement of cash flow. And so we want to review today as well as on Tuesday to make sure you've got the fundamentals of preparing financial statements. Everything in accounting is based on this equation: assets equal liabilities plus stockholders' equity. Stockholders' equity equals common stock plus retained earnings. Retained earnings are revenues minus expenses minus dividends. That's the fundamental equation. And related to that equation is the debits and credits, which when the debits and credits that you're working with are equal, then that means that this equation is holding. So that's what the debits and credits tell us. And what we know that in any transaction, what you receive is a debit, what you give up is a credit. And so all your accounts have debits and credits. The debits on the left side, the credits are on the right side. And so for everything you're doing, you have an account. But in general, they're reflecting the fact that if the account received something, it's a debit. If it gave up something, it's a credit. And we said in terms of reviewing, getting financial statements prepared, there is a cycle. We analyze transactions and make journal entries. Then we post to the ledger and prepare the trial balance. Then we make adjusting entries and adjust them, and once we get an adjusted trial balance, that we can then prepare a financial statement and close the accounts. And so that's the fundamental review. And this is going to guide a lot of what we do, So the expectation is going to be that you can go ahead and handle the information and go through these steps and prepare your financial statements. And we're going to build on that. And we said last time, uh, let me just go over a couple things here. With accounts, assets, they can have debit and credit interest, but the normal balance in any asset is a debit. If it's a contra account, like the allowance for depreciation, allowance for bad debt, it's going to have a credit balance. Our liabilities, debit and credit interest, but it should have a credit balance, common stock credit. And then we stated that retained earnings should have a credit balance if the company is doing well. So if the company is performing well, it would have a credit balance. revenues, credit, expenses, and dividends, debits. So when you're making journal entries, you just need to be aware of uh, the debits and the credits that can occur. But in general, on the revenues, expenses, and dividends, they only got one type of entry. Revenues have credits, expenses and dividends have debits. And when cash comes into business, you debit it. When cash goes out, you credit it. And so with that basic knowledge, you can make most of your journal entries. I gave you your transaction types. It might be good to make copies of this. But we have about 6 situations where cash comes into the business. So if it's a cash that comes into the business, you've got to determine which type of cash is coming in. Did you issue common stock? Did you have cash revenue? Did you collect? Did you borrow money? What happened? Did you get income in advance? Cash is always going to be debited in those entries, and we crediting whatever is over here on the right side. If we pay out cash, cash is always credited. And we have to say in the journal entry what we actually did with the cash, what asset. The account debited is not asset purchased, but the particular asset it was. It's not liabilities paid or expenses paid. You've got to go and identify something on this trial balance. So inventory was purchase of supplies, was purchase of prepaid insurance. You always got to get something with a number and and that's going to be what's going to be in the journal entry. If the accounts, if we don't have transactions involving cash, then we got those laid out. And so there's 20 something types of journal entries, and you still are figuring out what's the type. And then it's telling you what type of account is to be debited and what type of account is to be credited. So if you purchase an asset utilizing debt, you're going to debit whatever asset it was, and you're going to credit whatever liability you utilize to buy that asset, either account payable or a note payable. So these charts give you the basics so that you can make journal entries. Once you can make journal entries, then you can proceed through those steps and get to the financial statements. Now, we had this problem, in-class problem, and we went through the journal entries last time. We're going to go back through them just in case, but are there any questions on any of these journal entries? Are there any questions on any of these journal entries? Is there any journal entry that someone cannot make? So y'all can make all the journal entries?
What are the
So
journal
come on.
entries for?
Okay, what are the journal entries for? And we'll see that today. We're trying to prepare uh, our financial statement, the income statement, balance sheet, and etc. Well, you just can't create numbers. Those numbers are based on all of the business transactions, financial transactions that occur. And so that's a good question. So we make the journal entries, we post to the ledger to see how much is in each account, and then we prepare a trial balance, which leads us to the financial statement. So hopefully, as we go through this problem today, we did the journal entries last time. Today, we're going to do the journal entries and post to the ledger and get to the trial balance to show you how that if you can make journal entries, uh, steps 1 and 2, then we can prepare some financial statements. Every company in the world does this. They make journal entries, they post to the ledger, they get a trial balance, and they prepare financial statements. That's what every company in the world does. And that's the key thing about a company. What are they going to show? Financial statements. So, but in terms of, like, say, why do we make journal entries? Like, I think that's a good question. So let's begin to go ahead then and show, uh, if we're looking at this problem and if we make journal entries, how we're going to move to get to those financial statements. And we're going to do it on our Excel spreadsheet. And Excel simply helps us to add and subtract easier, uh, and everything. Okay, so let's look at this first transaction where we invested $10,000 in the business. Okay, all of these are financial transactions, and we got to record them, and then we're going to do something with them when we go from there. So, what are we going to do with this first transaction? Now, this is supposed to be a day where you all are supposed to be working so that you can get some bonus points. But if I do
So
the work,
Debited
okay.
cash, credited common stock for the
Okay,
first
so
trade.
on this first one, we say it's a type one. Let me get these other types out of here. So we said that our accounts that we're going to debit were what? 100 and what
100
else?
and 400.
400.
400.
So we debited what? Cash. And what did we credit?
Common stock for 10,000.
10,000. Now, every time we make a journal entry, eventually we want to know how much cash and how much is in every other account. So what we do is we go to the T accounts and we every time we make a journal entry, we're gonna post it. So for journal entry one, since we debited cash, we're gonna put a 10,000 here. We're gonna put this little one, which represents journal entry one. Then we gotta go over to common stock. I already got that there, and this is journal entry one. So now what we're doing is every time we make a journal entry, we're going to post it to these accounts because we got to know at the end of the day, after all of these journal entries are made, how much is in each account, how much cash we got, how much receivables. So that's why we post to the ledger. You see permanent accounts and temporary accounts. Permanent accounts carry over. And so cash through retained earnings are permanent accounts. Income summary, dividends, and all the revenues and expenses are temporary accounts. They're temporary close retained earnings account that we're going to close out. But is there any question on what we did when we made this posting? Any question? So we're going to post every entry. What's our second journal entry?
going to be a type 2.
So that's going to be a type 2 because we had car loan revenue.
The accounts are going to be 100 and 500.
100, 500.
So our accounts are going to be cash and revenue slash sales
We'll just say sales.
or sales.
What's our amount? 50,000, correct?
50,000. So debiting 50,000 cash and crediting sales 50,000.
So does everyone see that? In the first situation, the business got cash of $10,000. It gave out those stock certificates of 10,000. In the second one, it had sales revenue of 50,000. So it got 50,000 in revenues. What did it give up? It gave up sales. It rented cars out. Debits are always going to equal credits. We're going to once again post this. So when we go to the T accounts, what's our posting going to be? We're going to go to
50,000
cash
cash,
again. That's going to be what?
50,000
What else we're going to credit?
sales,
50,000. So we make the journal entry. Then we want to keep track of what's in each account. So we post an account. So at the end of the day, we can say how much cash we got, how much we got in sales. So every time we're making a journal entry, we're doing that posting. Now, hopefully you have your Excel spreadsheet out and you're doing this. Collection of cash from corporate customers. So in this case, we've done some work for the corporate customers and they're paying us $20,000. What's our type going to be?
Like three.
What's our type? 15,
3.
right? Oh, 15. We did some work in that. So it kind of sounds, no, okay, you're right. I'm thinking, getting ahead of myself. It is a 3. So what are we going to debit? What do we debit?
Cash,
Cash.
Debit.
What do we credit?
Account receivable.
Account receivable.
Debit cash. We're going to credit account receivable. Now our amount is how much?
20,000.
Now how would we post this entry? See,
Cash
we've
would be
had
on the
3
debit.
transactions involving cash. So hopefully you're seeing why we have to post, right? That is how much cash do we have? So the purpose of the posting is so we'll be able to know how much cash we have. So we'll be crediting what? Account receivable.
Yes, sir.
So that we can keep track of it. You can find your errors. The journal entry number that you're dealing with. So this is not the type, but the number. It's a help to do that so you can get back to them. What's our next transaction? Short-term working
5.
capital loan for 25,000. What's our type?
5.
Once
Type
again,
5,
we what? Yep. We debiting what? Cash. What are we
debit
crediting?
cash, notes payable.
We're probably going to use 306, which will be the short-term note. Okay. If the note has to be paid back in a year, it's a short-term note. What was our amount?
25,000.
Okay. So of course you see what's happening when we post this. Go back to the T accounts. We have what? Another 25,000 in cash. So it's part of the process to get where we're going. We've got to see how much is going to be in each account. So we got a debit and a credit. Now, as we proceed back to the journal entries, what do we know now? We now are starting to pay out cash. So our types now move to where cash is going to be credited. So what's the first thing we do?
The next one is debit supplies, credit cash.
What's our type?
Type 7,
It's type 7. So what's our account number for supplies?
130.
We're still crediting cash. So we're going to debit supplies and we're going to credit cash. And that's what, $1,000, correct?
Yes.
Now we got to go post this one. So hopefully you're up on what posting is. It's just a procedure thing. But this time we're crediting cash. And we're going to supplies and we're doing what? We're debiting supplies. Hopefully you see with this process, we're determining how much is in each account. In our next journal entry, what do we do?
That's type 8.
Pay
Credit
on accounts payable, so that's a type 8.
debit accounts payable, credit cash.
What's the number for accounts payable?
301,
Cash is what? 100.
100.
So we're going to debit what accounts payable and credit cash. That was $5,000. Once again, we're posting, so we go to the T accounts. And once again, we're now beginning to credit cash because we're paying cash out. Accounts payable, 6. Okay. So moving back to our journal entries again, what's our next journal entry? We're doing what? Paying rent. What happened to your bank account when you pay your rent?
Decreases.
We got the credit cash. What's the number for rent expense?
651.
651.
Debit rent and crediting cash again. That was 3,000, correct?
Mm-hmm.
Now we're going to go and post that. So we go to the T accounts. We have 3,000 here. And we just make this rent expense here. We're going to debit it for 3,000. Journal entry 7, I believe. And what's our next journal entry?
Dividends, debit, and cash
We're going
credit.
to pay 2,000 in dividends, right? So what's our
Mm-hmm.
type?
10.
Dividends, what's the number for dividends?
It's 455, I think.
So we're always putting down an account. See, we don't have any asset purchase or expense paid. You know, we got the actual item down. So we're going to debit dividends once again, credit cash, and the dividend paid was what? 2,000. We then go back now to our T accounts and another credit in here for what? $2,000 to cash. Transaction 8. Here's dividends over here for $2,000. Again, transaction 8. We have 2 more journal entries to go, correct?
Yeah.
We purchase supplies on account. What's going to be our type?
Type 12.
12.
It's 12. Our type is a 12. We didn't pay cash. The account number for supplies is what? 130.
130.
30.
And accounts payable is what?
301.
301.
We simply debit supplies. We're crediting what? Accounts payable. So supplies is debited. Accounts payable is credited. So now we got to post these. So we go to the T account. Supplies, we're going to have a debit of 8,000. That's journal entry number 9. Then for accounts payable, we're going to have 8,000. And that's journal entry 9 also. And what's our final journal entry?
There's a type 15. You
All
debit
right,
account receivable.
right. Type 15, we did the work. So in a type 15, what do we debit?
Account receivable.
On debit account receivable, is that 110? What are we going to credit?
Sales.
And our amount was how much?
30,000.
30,000. Now let's go and post this. So we go to the T accounts and we'll put another 30,000 in sales. Number 10. I'm going to go up to account receivable, 30,000. So now we got everything posted. And so our job now is to determine how much is in each account. How much cash do we have? So where Excel helps us, we can come right here and hit auto sum. It tells us what the debit is and what the credit is. We're going to take the difference and the balance is going to be on the side. Whatever is larger, that's where the balance is going to be. And so, but we're going to put our equation in, equal, shift parentheses. We'll click on the 105 cell, put a minus in. We'll click on the 11,000 cell. We'll close our parentheses. 94,000 is always going to do that. So we got the equation in. So the balance in cash is 94,000. Any question on what we did? We auto sum, take the difference, put it on the logic. What's going to be the balance in account receivable?
10,000.
That's going to be 10,000. 30 minus 20 is 10,000. Nothing in inventory. How much are we going to have in supplies?
9,000.
That's going to be 9,000. Then common stock is going to be what? 10,000. So we're now getting the balances in each account. Accounts payable, the balance is going to be what? 3,000, but it's going to be on that credit side. Short-term payable only had one entry, so it's 25,000. Sales, we had two entries, so we'll add those together. So sales are going to be what?
80,000.
80,000. And the rent expense is going to be what? 3,000. And the dividends, we only have one number, so it's going to be 2,000. So now we've done what? We have determined how much is in each account. Next, we need to check to make sure we didn't make any errors. So we go to trial balance and we're going to put the accounts in the same order as they are on that chart of accounts. And we're almost ready to get the financial statement. So we go to trial balance. First account is cash. So how much cash we said we got?
94.
How much?
94.
94,000. Accounts receivable comes next. How much is in receivables?
10,000.
What's our next account going to be?
Supplies.
How much is in supplies?
9,000.
That's all our assets, right? So we'll just skip a line just in case. Then we go to what? Accounts payable. How much is in accounts payable?
3,000.
Then we have the short-term note. How much is in the short-term note?
25,000.
And then we go to common stock. How much is in common stock?
10,000.
So notice all of our permanent accounts are up here. Then we're going to go down here and pick up our temporary accounts. How much is in dividends?
2,000.
How much is in sales?
80.
So
80,000.
notice this is going to be on the credit side. So whatever side they are on that trial balance, that's where they are here. And then we had rent expense. How much was the rent? 3,000. Rent was $3,000. So we don't have any clerical errors if we add these up and the totals are the same on both sides. So we're just going to come down here and we simply going to go up and hit auto sum. And when we hit auto sum, we got 118,000 on both sides. So that means that there are no clerical errors in what we did in terms of journalizing, posting, and getting account balances. Any questions so far on where we are? Are there any questions?
No, sir.
Well, let's do an income statement. So how are we going to do this income statement? We'll go to sales and we look at everything from sales on down and we'll prepare an income statement with it. So once you get the trial balance, the income statement automatically falls out. The sales are 80,000. So that's going to be the net sales since we didn't have any returns. That's going to be our gross profit since we didn't have inventory. Then we're going to pick up the rent expense. We only had one expense.
3,000.
So that's rent. We can just always just kind of copy and let's see if we can paste them in here. Okay, so there they are. The rent expense and the amount. Now that's the only way. If there are other expenses down here, we would just put them all in that way. Then we'd auto sum them and we'd come up with the total expense, 3,000. And now we have a net income, which is what?
77,000.
So what did we do? We made journal entries, we posted them to the ledger, we got a trial balance, and now we have an income statement. Can everybody
How
do
do
that?
we, Professor Boyd, I have a question.
Yes.
How do we find the net income again?
We simply subtracted from the gross profit of the revenue the expenses. So gross profit, less these operating expenses give us the net income. So it's just like you personally. Your net income is your gross income less all your expenses. Sometimes we'll have a cost of goods sold. We got to subtract that. And a lot of time we have more expenses, but all we do is come here, look at every account, sales on down, put the sales up here, put the expenses here and subtract them. Any questions?
I have a question.
Yes.
Do we have to have the boxes looking like that, or can our boxes be smaller?
Whatever you want. I'm just
Okay,
trying
I
to
just
make
make
sure
sure.
everybody can see them here. Got it? Yeah, I'm
Yeah,
just
thank
doing them.
you.
Okay. Any other questions?
Dr. Board, I have a question. Uh,
Okay.
so for the less of cost of goods sold, I know on this example we don't have inventory. When we go through the homework, there's inventory and then sales. It doesn't ask for the inventory sheet, but do we have to do the cost of goods sold from that inventory?
Typically you
Based off
would.
what we said.
Yeah, typically you would.
Okay.
And of course, you got the inventory flow chart right here. So there's a template with the inventory flow chart on it. So you can see if you get a trial balance, it's a pretty simple process to go and get your net income. Temporary accounts, starting at sales. Then for retained earnings, notice that the retained earnings right now is 0. Okay. New company. But to get our ending retained earnings, we're going to add the net income. So we simply bring the 77,000 down. We always do that, whatever the income is. Then we're going to subtract the dividends. It's 2,000. So what this is telling us is, given that we earned this money, how much of it we kept into the business. So how much did we keep in the business?
75,000.
That's correct. We made 77. We kept 75,000 in the business. And a lot of time, so that we don't have any issues, we'll come in here and put by the zero the 75,000, so that we're jump down 1 second. Let me put it this way. So we put this here and we'll put it in red just to remind us that when we get ready to do the balance sheet, we're not going to use zero. We're going to use 75,000. So that's just a reminder. That is if we're going to balance, we've got to have the new retained earnings. So the final statement that we're going to prepare is a balance sheet. The balance sheet just consists of the accounts from retained earnings up, and it represents the accounting equation. The assets have to equal the liabilities plus the stockholders' equity. And so we have cash, account receivable, and supplies. And we just go to the end of the year. So our cash was 94,000. Our receivables were 10. And our supplies were 9,000, correct? Yes. But we add all these assets up, how much do we have? $113,000. Do we have any other long-term assets? No.
No.
So the total assets in this problem is 113,000. Now the liabilities and the stockholders' equity have to equal that number. So accounts payable, how much do we have in accounts payable? 3,000. And the short-term note payable, and that goes here. So we got accrued liabilities, but that can just as easily be, uh, short-term note. That short-term note was how much? 25,000. So this is a template, so you change it in terms of what works best for you. And so the total current liabilities are 28,000. We don't have any long-term liabilities, so total liabilities are 28,000. Our common stock was how
10,000.
much?
10,000.
10,000. What's our retained earnings? If you put the zero in, you're not going to balance. But we know that, we've got it up here to remind we got to put 75,000 in. And we don't have any dividends on here. It's retained earnings up. So when we add these two numbers together, 10 and 75, we get what? 85,000. Okay. Then 85 plus 28 is how much? What's 85 plus 28?
113. So it's gonna be 113,000.
That's correct. So on that balance sheet, the assets have to equal liabilities and stockholders' equity. So then when they're equal, then you know you where you need to be. Any questions? We got one final thing we got to do, which is to make some closing entries. Every account, all of these temporary accounts got to be closed out so that the retained earnings will be 75,000. So we don't need these accounts anymore. Okay. So there are 4 closing entries that we make. In the first one, we're going to close out the revenue. And so here we debited to close it out. So we're going to debit sales for 80,000 and we're going to credit income summary for 80,000. That's closing out the revenue. In our next closing entry, we're going to close out the expenses. So this rent expense, if there are additional expenses, you will close them out too. So we debit income summary 3,000. We credit rent expense 3,000. Our third closing entry, we close out the net income to our retained earnings. So we're going to debit income summary and we're going to credit retained earnings. So we write here where it is. So it's 77,000. So we simply debit income summary for 77,000. We credit retained earnings for 77,000. And what's our final closing entry? Close out those dividends. So every account that's temporary is closed out. Now, whenever we make a journal entry, we got to do what? Post to the ledger. So we got to go back to our T accounts. And so on that first closing entry, which is Roman numeral 1, to close it out, we're going to debit sales 80,000. And we're going to come over here to income summary and credit it for 80,000. That's closing entry number 1. So once we make that closing entry, the revenue is now zeroed out. Next, we're going to close out, post the closing for the expenses. So we're going to credit the rent 3,000. That will be all expenses. And we're going to debit income summary for 3,000. That's closing entry 2. In closing entry 3, we debit income summary. So we're closing it out for 77,000. We're going to credit retained earnings for 77,000. So that's closing entry 3. Then in closing entry 4, we're going to close out the dividends to retained earnings. So we're going to put the 2,000 here to credit it. And we're going to credit dividends. And we're going to debit retained earnings, 3,000. So what's the balance of retained earnings now? It's 74,000. Is that what we had on the financial statements? We had 75,000. We missed something. Let me just see here. Okay, this should be 2,000. So we've gone through the entire process. We've gone through the entire process on a simple example. We can have more accounts, but we're still doing the same thing. Are there any questions? I'll say that. So this should be on my desktop somewhere, and then I can plan to send it to you. Are there any questions? So everybody's able to do this now? Good.
Will the recording be on YouTube anytime soon?
Probably I'll get it on tonight. And I saved, what we did. And so I will probably put that in course content. So you'll have the recording, it takes them a little hour or two to process it. And I will put the spreadsheet into course content, under what the financial review. So you'll have both. And what am I going to get on Tuesday?
The
Homework and
financial.
well,
Yeah, that was what I was gonna say. The homework.
and these teams, Dr. Boyd, if everybody's all right with it, I've got the names from the group me that people put their names in. But if you guys want me just to throw names into the teams, just let me know, so we can get these over to Dr. Boyd.
Can someone send the group me link, please? I don't have it.
Yeah, I'll
I can
send it.
Thanks.
So hopefully, you just go and assign them. You'll keep the team leaders in general, and then assign accordingly. Now I only
Yeah,
see 20. I only see 20 people here today. I guess 19. So
that's what I did,
So
Dr. Boyd.
as a team leader, do you just like pick who you, or like do people sign up for it? How does it go? I wasn't here
however
last
y'all
class.
want to do it, James. But what
Mr.
we
Wood,
have is we have people as team leaders who should be A B students. I don't know whether James is gonna be an A or B student this semester, but
What you mean? You already know I'm an A student. Why'd you doing that?
I don't know you having trouble Saturday in and everything. So, but in general, we've got a leader who is strong, and so in general, that's the case. Uh, and of course, Mike and James will always be there for, if a question or comment that comes up. Now, what I've decided is that on Tuesday, because you all have to have these in, then the teams are going to be assigned journal entries to do what I did today. So I won't put it all on the new students by themselves unless they want it by themselves. But those Ashleys that you all want this by yourself, or y'all want help?
Yo.
Help.
Oh.
So what we'll do then is we'll go over this problem, but each team will be, and I'll let you know ahead of time what journal entry it is. But you're supposed to be doing, everybody's supposed to be doing the whole problem and turning it in. It's not the most difficult problem. And so you want to go through this whole process. And so for everything that's involved, I will assign a team the responsibility to present. So each team will have a journal entry that they post to the ledger. Then somebody would do the trial balance. And then somebody would do the financial, those three financial statements, and some team would do the closing entry or something else. So that's how we do it. So I did a little bit more today, but in general, you've got to do this. Okay. So I did it today, but I won't be talking on uh, Tuesday.
I have a
Back.
quick question.
Okay.
I haven't seen my team leader in class. I'm not sure what to do.
Who is your team leader?
Oh, um,
Who's
oh,
your
never
team
mind.
leader?
I'm Bruce, but I think Michael Saul just added me to his team.
Okay.
Yeah, so that's fine.
Can I
hey, Dr.
also
Boyd,
be added to the?
I'm going to post these teams real quick. I just
Yeah.
Okay.
I split them up by or split everybody up by grade as well, so we didn't have we had a mix of
Can I be
folks.
added to the group chat also?
Yeah, I got you.
Thank you.
Like I said, we do things in teams so that our performance, in general, the performances would work better. And so, this past semester, all the students who came and did what they're supposed to do passed, and principals too. But you got support all the time. Uh, Sometimes you're doing things separate. So your first, the problem that's due on Tuesday is an individual. Then you have a two-person one after that. And then you have your presentations. That'll be a full 4 teams. But I'll go through all of that. And once I get the teams, I'll assign you, just what you're working on. Any other questions?
What are the teams for? Like, is it for the homework?
Yes, and every time we have something that's very complicated, we'll have a 4-person team. Like you all have to make a project and prepare financials around it. It will take a lot of time. So the purpose of the fourth-person team is to help get that done. There will be there will be a financial statement review problem that you'll be doing in a couple of weeks. It's very intense and involved. I mean, it's much longer than anything you will have seen. And so with the team, you work on it in stages rather than I don't get anything. As I said, if you did all of this by yourself, typically 60% of the people make D's or F's. So I created the teams, and typically 80% of the people pass. So that's the purpose of the team, so that 80% of the people pass. Okay? When you go to work,
Professor
you got to work in a team, so people expect that.
Professor Boyd,
Yes.
you said there'd be bonus points today. Are you still gonna add them to?
I did all the work. Y'all made
Uh-uh.
me get,
No, you didn't. There was people helping you. We were saying
oh,
the next.
there were people helping me.
Yes, like me.
Yeah. Okay, so all right, how many bonus points shall I give today? How many points y'all deserve today?
5.
25.
Oh, okay, so today 5 for people who are here. If you're not here, not on here, you don't get any points. And this platform records everybody who's here. Then your next set of bonus points will be on what you present on Tuesday with your camera on. So you have your homework, but if you want some bonus points, I'll look at what the teams do. Got it? So you've had a week to get ready, learn to get your camera on and perform. And so that will be the expectation, especially next week, because then you got a team presentation dealing with fraudulent companies and cryptocurrency. Any other questions?
I have a quick question. So, in the teams, is it only supposed to be 4 people, including the
Just
leader?
correct. 4 people, including the leader, because at times I'm going to split those teams into 2.
Yes,
So I
sir.
need
I,
to
And we
work.
send that team to you. We send you an email.
Mike is going to get it all together and send it to you. So you get it to Sewell's, and then he's going to send them all to me. He'll go
Okay.
over and make sure everybody's on a team. The teams are 4. They can be less than 4 possibly, but no more than 4,
Okay. Thank you.
certainly. It's when it's more than that, it's hard for people to get together. Schedules are difficult. And so at 4, you should be able to get a common meeting time. So, I've said some things today. So your team should be meeting. And once you get your assignment for that problem that's got to be presented on Tuesday, so you'll have your individual points, but there'll be bonus attendance points for what the team is assigned to present. And so your team either presents it or they don't. And of course, you only get credit if you are here. So is that clear? And of course, when are you supposed to have this project in? With this assignment in?
Tuesday.
Tuesday.
What time? What time on Tuesday?
11:59.
I think I switched it, didn't I? I think it's 5 o'clock. You got to have it before we get to class. So you need to have worked on before class. So let's do it 5. And it's going to disappear at 5. So if you don't get, whatever you got, you get it in by 5. And there's partial credit and everything, but there's no credit if you don't get it in. And I'm not taking things in. You can't email it to me. It's too much of a hassle to go back and find emails, all semester long from a bunch of people. So you got to get it in. And if you don't get it in, that's just, there are 110 points. You just missed 10 points or whatever if you don't get it in. Any other questions? Okay, well, everyone have a very good weekend. Get the problem work. As soon as I get the teams, I'll show what the team will be presenting that day. And like I say, the bonus points that day is based on you all presenting. So I'll be sharing the screen, and you have to put it up there and take care of it. Make sure you're on time, maybe a few minutes early. I know some of you were here a few minutes early, but probably since we're presenting and everything, you might need to try to be on here about 10 minutes after 5. I mean, excuse me, 20 minutes after 5, because we don't need to lose time, okay? Uh, waiting for people to get here. So since there's a presentation, plan to be on it 20 minutes after 5. Wait a minute, what time does class start? 3,
5:30.
5:30. Okay, so yeah, 5:20. Plan to be here at 5:20. Anything else? We'll have a good weekend. It'll be a little chilly for Houston, but overall not that bad. And we'll see you all on Tuesday. If you need any help from me, there's that 5 o'clock time on Monday. Virtual, the same sign in. Email me if you need to talk to me. Uh, if you have questions on anything. Okay. Okay. Good night, everyone. We'll see you on Tuesday.
All right, Professor Book.
Yes, James. Oh no, that's Kevin. What's on? What's up, Kevin?
Ain't nothing wrong. You told me not to turn the homework in. You told me wait till Tuesday. I could have been turned that in.
I turned
No,
mine
go
in too.
Same.
turn it
I didn't
in.
know.
Nah,
Let's
I
do
didn't
I can
know
turn
Tuesday.
it
we.
in. You told me
Hey,
not.
Just do Tuesday. Not this. This is just special. Everybody getting the
okay.
same grade on this, okay? So you're not turning anything in. We're just going over in class. Because too many people would not have been able to turn anything in. So I've gone through the whole process from people who never seen some of this. So now I can ask everybody to turn it in. But what we did today is just based on what we did in class today. Okay? Nothing needs
Okay.
to be turned.
And I ain't want to interrupt you while you was talking, but so I thought questions 3 and 10 wasn't they supposed to be reversed because you made a account receivable credit before you even had a debit account receivable, and you can't.
That was because I was going in straight order.
Okay.
I did the full cash receipts because students have never seen the journal entry. Then I did full cash payments. Then I did the 12 and the 15.
Okay. So you were just doing it for them to see how it is.
So they could just see it in terms of how to
Okay.
make a journal entry.
I was like, yeah, I knew you would have took points off for us if we would have done something like
Yeah, of
that.
course. But I got to take care of the baby, I mean, you all see these people, right? What are they saying?
Listen,
I don't
it's
know.
gonna be a tough one.
I'm a group leader and I don't got no group. Ain't that crazy?
I don't,
I ain't
I'm a
gonna-
group leader and I don't know
Hey, hey,
who in the group.
hey, Kevin, don't worry about it. I
I don't got.
already put people in your group, sir. People were saying they
Okay.
were in your group.
All right.
So, and Mr. Williams, same. I've got him.
Okay.
I'm
Okay.
about
So
to
he'll
post it
get
to
that
group.
to,
All
I'm
right.
about to post it to
he'll get
group
that
me. And
to you all.
Okay. Are you in the
So
same group
basically,
me as them? Cause I think they got two different group me's.
yeah, I don't know. There's been about 16,000 on this group me. So
Okay. Well, you got my number now, so just add me
Yeah.
to the whichever group me you in.
Yep. Gotcha.
All right,
Gotcha.
appreciate it.
16,000.
It's
Hey
been
man.
nonstop since you posted the syllabus, Dr. Boyd. It's been nonstop. So yeah, gonna be launching
They've
next
been
week.
trying to figure out stuff. You already got the topic on the document for the group? I mean for
No, because I
the
didn't have the
project?
group. I'll get that. That'll probably come out tomorrow. I didn't have the groups. Got it?
I got you. Yes, sir.
Okay.
I didn't want to send it out because that would have just created more confusion. So just give them a little bit at a time. But that'll come out of everything.
Okay.
Yes, sir. I got you.
Appreciate it, Dr. Boyd.
Okay, well
Yeah.
you all have a good one, and I'll see you all next week.
All right. Have a good
All
one.
right. Yes, sir.